We are doing categorized MCQs for AS, and this is the basic costing MCQs. You can expect 2 MCQs of this type in any paper that you're going to give. Okay, let's start. We are starting from the latest paper that we have available at our disposal. Come on, read the question, Vayun.
Which type of business is most likely to use a batch costing system?
What is a batch costing system? Do you know anything about it?
Yeah, miss. Batch costing system is when products are produced in batches.
When products are produced in batches. So, do you think an aircraft will be produced in batches?
No, miss.
Hmm?
No, miss.
A ship,
No, miss.
a wedding cake,
No, miss.
what can be produced in batches?
Car component manufacturers.
A car component manufacturing.
Yes, miss.
Okay. So the option is B. Go to the next one. Read, please.
Which characteristics describes an indirect cost?
What is an indirect cost?
Um, Miss, indirect cost is when it's not taken from the revenue, like it's not directly taken from the revenue.
What is the difference between a direct cost and an indirect cost?
Not sure, miss.
Yeah, tell. Direct cost is a cost that you can directly trace to a product. And indirect is something that you cannot trace to the product, but it does happen. Like
Okay,
if
miss.
I say I have a direct cost of a pen, so everything that you can see in the pen is direct cost.
Okay, miss.
But if you take the rent of the factory where your pen is produced, that becomes an indirect cost.
Okay, miss. Understood.
So what is the characteristics of an indirect cost?
Indirect cost is when it's not when you're not able to directly relate it to the product,
So what is the
and
characteristics over here?
um
Read now, please.
a cost that cannot be controlled by company managers. A a cost that cannot be directly traced to individual cost units or cost centers. A cost that changes
This
at
is
different.
indirect cost. Something that
Yes, miss.
cannot be controlled by company managers. This is not possible because indirect costs are the costs that can be controlled by a company manager.
Yes, miss.
Okay, so it is B. I'm giving you 2-3 minutes time to try 24 and 25, and then again I will come to you. Manufacturer of product type X is incurring a specific cost. When he is producing 6,000 units, the cost per unit is 3. Open. $6,000 units he is produced and cost per unit is 3. Okay. Can you give me the
Yes, miss.
total cost for this?
Okay, miss.
What is the total cost for this?
The
18,000.
total cost will be 18,000.
9,000 units is produced and cost per unit is 2. What is the total cost for this?
It'll be 18,000 also.
Can you give me the nature of this?
Miss, this will be a fixed cost.
Why?
Miss, because for each unit produced, the cost per unit is
Because even
$3.
when the level of activity is changing, even when your level of activity is changing, your cost per your total cost is not changing.
Not changing.
The cost is fixed irrespective of the level of output. The cost is fixed irrespective of the level of output. This
Level
is
of output.
cost. You're with me?
Yes, miss.
Come on. Go to the 22nd, please read it.
Which statement is correct? A. A direct costs change in direct proportion to changes in level of activity.
What does this mean?
Um, Miss, it's variable cost.
No, what is the meaning of this statement?
Okay. Like depending on the level of activity, the change in cost will occur.
That means if the level of activity will increase, the direct cost will
Increase?
increase.
Yes, miss. And if the
Direct
level
cost
of
is
activity,
basically which cost?
sorry, miss?
Direct cost is basically which cost? Variable or fixed? Direct cost is basically which cost? Variable cost or fixed cost?
It's variable cost.
Variable cost. Can you tell me what are the things that comes in the direct cost?
Um,
What are the things which comes in the direct cost?
Not sure, miss.
Direct material, direct
Or
labor,
direct material, direct labor, and
and direct
yeah,
expenses. This is a part of
direct
the
expenses.
direct cost. Okay? And this is
Yes, miss.
99.999% times variable. So, when the level of activity will increase, the direct cost will increase. So, this statement is
Yes, miss.
correct. Let's read about the other statement.
Yes, miss.
We
Fixed costs.
should be confident that the other is incorrect, right?
Yes, miss.
Yeah.
Fixed costs remain as a constant proportion of total costs when output changes.
Hmm.
Um,
Total cost is made up of what?
Total cost is made up of units produced and
Variable cost and
variable
fixed cost.
cost,
I am
fixed
sure you
cost.
watch the marginal costing videos.
Yeah, miss. Variable cost and fixed cost.
Fixed cost is a constant proportion of total cost
Yes, miss.
when the output changes. So even if the output is 6,000, fixed cost is suppose 10,000, it will still remain 10,000. If the output is 10,000, fixed cost will still remain 10,000.
10,000.
But when I am talking about this, the cost per unit will reduce. If the output is increasing, the fixed cost per unit will reduce, but the proportion will remain the same.
Yes, miss.
So the total fixed cost will always remain the same, but fixed cost per unit will change, right?
Will change. Yes, miss.
So that means this statement is partially correct.
Okay, miss.
Come on, go to the B1.
Semi-variable costs increase in direct proportion to an increase in production.
Is it correct?
No, miss.
No. Which cost increase in direct proportion to increase in production?
Variable cost.
Okay. Next one.
Stepped costs increase in direct proportion to an increase in production.
Option is A. Okay.
Miss, what is stepped cost?
This up to a certain level of activity, this cost remains fixed. Say 10,000 for 10,000 units.
Okay, miss.
When you go to increase one unit, again it will high. It will
Okay,
increase for a fixed proportion and then it will remain fixed for another 10,000 units.
okay, fine, miss.
Then again it will increase for a certain proportion if you exceed that activity and it will remain fixed.
Okay, miss.
So it works in ranges.
Yes, miss.
Can we go ahead?
Yes, miss.
Please read.
Jul- Julia is a retailer of electronic equipment. She decides to introduce a system of just-in-time inventory management. Which benefit can she expect from this?
Okay, Farhan, will answer us this question. No, first explain us the meaning. When you're introducing just in time, what does this mean?
Um,
What is the meaning of just in time? But what is just in time? Just in time means you produce the goods exactly when you need it. Yeah?
okay, miss.
Just in time means you will produce the goods exactly when you need it. Just
Needed.
in time.
Okay, fine, miss.
Okay? So, and
Yes,
you
miss.
are a retailer of electronic equipment.
Yes, miss.
Electronic equipment means what?
Um, like electronics devices and all that.
Electronics. So, if you are going to
Yes, miss.
produce the goods just in time you need it, what is the benefit of it?
Um,
Suppose when I get an order of iPhone 15, okay,
yes, miss.
I will order immediately and I will sell immediately.
Yes, miss.
This morning, iPhone
Oh,
16 is launched.
okay, miss.
If I have stock of iPhone 15, I will be in a loss.
Yes, miss.
But if there is a product improvement that is happening, if there is
Okay,
a
miss.
product improvement that is happening and I am using just in time, that means I can take advantage of product equipment improvement.
Yes, miss.
You can tell me. I am
Miss,
an
I'll tell you.
electronic person who sells electronics, system of just in time. What benefit I can expect from this? I think I can expect this benefit. I wanted to read others. I'm giving you 2 minutes time. And tell me, is the other three any benefit? And you have to explain me every statement. If I do just in time, can I increase my amount of trade discount?
No, miss.
If I do just in time, can I limit my profit? No, because I am always doing
No.
just in time. So I will have trusted suppliers.
Yes, miss.
And just in time is not going to protect me from shortage. It is going to put me in danger of shortage.
Yes, miss.
Yes. So which option is
Yeah.
correct?
A.
A. Go to the next one. Come on, read.
A company incurs a semi-variable cost per employee hour worked. If hours worked exceed 10,000, an extra fixed administration cost of 600 is occurred. What will be the total administration cost when 12,000 hours are worked?
Okay, fine. So what are they saying? It's a semi-variable cost.
Yes, ma'am.
When I say it's a semi-variable cost means what?
A semi-variable cost is
It's partly
like
fixed,
partly, yes, miss.
partly variable.
Yes, miss.
Okay. So I want to know the fixed costs included in this total cost.
Yes, miss.
I want to know the fixed cost included in total cost. How do I find it? How do I find it? Why you know how do I find it?
Not sure, miss. I had confusion in this question.
So it is change in cost divided by change in quantity.
Okay, miss.
What is a change in cost? You've not
Change in
watched.
cost is 4,000.
So change in cost will be 24,000 minus 20,000. Change in quantity 10,000 minus 8,000, 2,000. Yeah.
Yes, miss.
So 4,000 is the change in cost and 2,000 is the change in quantity. So give me the variable cost included in total cost.
It'll be 2, miss.
4,000 divided by 2,000. So variable cost included in total cost is 2 per hour.
2 per hour, yes, miss.
If my total cost is 20,000, what is the variable cost?
8,000,
8,000 into
yes,
2.
miss. So it'll
8,000
be
into 2.
16,000.
What is the
16,000.
fixed cost?
Fixed cost will still be 4,000.
Come on. Over here, what is the variable cost?
The variable cost will be
10,000 into
20,000.
2, 20,000.
20,000.
What is the fixed cost? 4,000.
4,000.
Okay. I know now my fixed cost is how much? 4,000.
Yes, miss.
Variable cost is how much? $2 per hour.
Yes, miss.
I'm going to work for how many hours?
12,000 hours.
So variable cost will be how much?
2,800.
What
2,400,
nonsense
sorry.
are you talking?
24. 2,400, sorry.
2,400.
24,000. My mistake.
And if I work for 12,000 hours, my fixed cost is going to increase by 600.
Okay, miss.
Yes, what okay? Yes or no?
Yes, miss.
So this will increase by 600.
Yes, miss.
Total fixed cost will become 4,600.
4,600.
So what will be my total cost?
24,000. No, it'll be 28,600.
24,000 plus 4,600. My total cost will become 28,600.
600.
Option is A. I want you to do this 5 to 6 times right now.
Okay, fine, miss.
How to find the cost included in the total cost, the formula for it, and how to do this sum first.
Miss.
This one. Which costs are charged to individual job in a job costing system?
Yes, miss.
What is charged to individual job in a job costing system?
Direct labor, direct material, and overhead costs.
Overhead cost is charged to individual job. That means the overheads, that is the fixed cost. Will it
Fixed
be
cost,
only
yes, miss.
related to one job?
It's to particular jobs, right, miss?
Yeah, so in a job costing system, to that particular
Yeah,
job,
miss.
which cost you are going to charge?
Oh, only direct labor and direct material
So
then.
in a job costing system, only direct costs is charged to the particular job.
Yes, miss.
Okay? So what
Okay,
does it
miss.
come up to?
A.
A. Direct labor plus direct material.
Direct material.
Okay. Can you tell me what is absorption costing? What does the person use in absorption costing?
What does a person use in absorption costing?
There is two types of costing, right? Marginal costing and absorption costing.
And absorption costing.
What is the
Miss,
difference?
absorption costing is like costs that are used for the cost of manufacturing,
Which cost?
like cost for like direct costs.
You can use it as absorption costing. Okay, in absorption costing, you don't find contribution. What else?
Um, in
Absorption
absorption
costing
costing
uses
also,
total cost.
Yeah, miss.
Total cost, that means it uses the variable cost and fixed cost both.
Variable and fixed cost. Yes, miss.
Marginal costing uses what?
Marginal costing uses no, marginal costing uses fixed and variable cost, right?
Marginal costing uses only variable cost. Marginal costing uses only variable cost. Absorption costing uses both fixed and. So why we use absorption costing? Do we use absorption costing to value inventory?
No, miss.
No. No, valuation of inventory is done as per IAS too. We use absorption costing to find out the selling price because we need to know our total cost.
Yes, miss.
Okay. In absorption costing, we need to know our total cost.
Yes, miss.
Total cost means variable cost plus fixed cost.
Plus fixed cost.
So in absorption costing, all the production costs are included.
Yes, miss.
In absorption costing, all production costs are included.
Included.
So we use absorption costing so that we can find the selling price
Selling
and
price.
all the production costs are included.
Yes, miss.
So why do we use absorption costing? But
Um, to find the selling price,
yeah, why we use absorption costing?
to find the total cost.
So when you're using absorption costing, you have you use absorption costing to calculate the selling price, and so
Selling
that
price.
all your production costs are included. Okay?
Yes, miss.
You sure? Okay. So option D. Are you with me?
Yes, miss.
Come on, read the next question, Farhan. Read. What is just-in-time management of inventory?
A miss just in time is when it's the products are supposed to be produced on short notice.
Just-in-time means you produce when you need to sell. You will make the product when you want to sell. You will
When
buy
you want to
the
sell.
product when you want to sell. So
Yes,
in
miss.
administration, do you think just-in-time management of inventory can be used?
No, miss.
Okay. When you need stationery, you need to have a stock of it.
Yes, miss.
Distribution is a service.
Yeah, miss.
So do you need just-in-time for that?
Um, yeah, miss.
Why?
Miss, distribution is a service, right?
Hmm.
So, when the service is needed, we can use just-in-time management to, like,
Okay. Production.
yeah, miss, production also.
Hmm?
Production also
You will produce when needed.
when needed. Yes, miss.
So this will use just-in-time. Research and development.
No, miss.
So option is D.
D.
Come on, I want you to try from 20 the next month, 5 questions try ahead, okay?
Okay, miss.
One by one, you all will explain it to me. So why do you use absorption costing? Why do you use absorption costing?
We use absorption costing to, oh yeah,
Calculate the selling
to
price
calculate the selling price
and
and to find
include
all
all
the
production
production
costs.
costs
Because
that are
absorption
included.
costing includes all production costs and marginal
Yes,
cost
miss.
only include the variable costs.
Yes, miss.
With me?
Yeah, miss.
Okay, we did this also, no? Which business would benefit? What is a
Yes,
cost
miss.
center? So cost center is basically a place, okay, where you
Yes, miss.
incur all your cost. What is a cost unit?
Cost unit is per product or
Cost
per.
unit is the product or service for which you are incurring costs. Okay?
Yes, miss.
So the product or service for which you are incurring cost will be the
Current
cost
cost.
unit and cost
Yes,
center
miss.
will be the location. So
Yes,
what
miss.
describes the cost center? It is a location.
Yeah, miss.
With me?
Yes, miss.
Come on. Next one. What is a fixed costs?
Fixed costs is the cost that don't change.
Okay, they want what best describes. So fixed cost is
Yes,
a
miss.
part that stays same and the part that changes as output increases. So the
No,
fixed
miss.
part is correct, this is wrong. The same cost per unit for any level of activity. This is wrong.
Um,
Same cost per
yeah,
unit
miss.
for any level of activity is what? Fixed or variable?
Variable.
Same total cost for any level of activity? That's not possible because
Okay,
only the
miss.
fixed cost will remain the same. But variable
Yes,
cost,
miss.
the total variable
Will
cost
differ.
increase or decrease with the level of activity. So now we have
Activity.
only option D. Same total
Okay.
cost for output within a relevant range.
Relevant range. Okay, miss.
Go to the next one. Budgetary control system. What is a budgetary control system?
Budgetary control system is to control the it helps
Budgetary
manage the
control
income and
system
losses.
encourages departmental rivalry. It gives responsibility to personnel. But
Yes,
it
miss.
sometimes motivate your staff, sometimes demotivate the staff because you have to work in budgets.
Yes, miss.
Also, budgetary control, if you want to improve the business performance, yes, it can definitely help you to cut the cost. But if you want to do productivity or you want to try new things, that is not possible with budgetary control. So this
Yes, miss.
assumption is wrong. So for
Yes, miss.
budgetary control, what happens is it encourages departmental rivalry and it defines
And
of responsibility for your personnel. So it
yes,
is
miss.
option C. Okay,
Yes, miss.
go ahead. Budgetary control
Bit.
is what plan? It is a short-term plan and it is
Okay, miss.
quantitative, it is not qualitative. That means in
Okay,
the
miss.
long run, if you want to have the same plan, it's not possible. You make a plan, you review. If there is something wrong, you change the plan. Okay,
Yes, miss.
it is based on budgets. That means it is based on the quantity.
Yes, miss.
Okay, are you all over here?
Yes, miss.
Okay, so both of you can discuss. Come on, your manufacturer has two departments, assembly and painting. Are you with me?
Yes, miss. Yes, miss.
How much insurance should be apportioned to do the assembly department?
Yes, miss.
The cost is 5,000. You have to apportion it between assembly and painting.
Yes,
Yeah?
miss.
And you only want to know how much should be apportioned to the assembly.
Assembly.
Okay. So because you want to apportion it to assembly, stop shaking. And it is insurance of the machinery. So we will
Yes, miss.
take the machinery at net book value.
Okay,
So
miss.
net book value, that means 5 threes are 5 twos are.
Yeah,
So
miss.
3 So 5,000 3 twos are, so it's 3,000 and 2,000. But machine insurance
Okay.
costs, 1 minute. Since it's insurance costs, so the insurance would be dependent upon the repairs.
You tell us.
Yeah, miss.
Insurance would be dependent upon the repairs.
Repairs.
You will write and memorize this. So 5,000 divided by 20 into 14, 3,500. Option B. So insurance, you will write it in your notes where you're going to memorize it. Insurance will be a portion
Apportioned.
based on repairs.
So then what you
Okay,
did?
fine.
14 plus 6.
Check. Which statements about budgetary is correct?
C.
Budgetary does
C.
not give you accurate overhead allocation.
Yes, miss.
Budgets is made by managers so that we can easily achieve it, although it's not necessary that you definitely achieve it.
Yes, miss.
When you make budget, you take your financial factors into consideration,
Yes, miss.
and making the budget is a time consuming process.
Not necessarily.
It is a time consuming
It
process.
is.
Yes, because you have to take all the factors
Oh,
into
yeah. Yeah. Sorry, miss. Yes.
So, which statements about budget is correct? It is option 2 and 3.
C.
Okay.
Yes, miss.
Under absorption. When does under absorption happen?
When
When
the
you recover less.
actual is less than the absorption rate.
So when your actual recovery is less than is less than estimated,
Yes, miss.
then you have under absorption. When
Yes,
can this
miss.
happen? This can happen when your actual expenditure is less than budgeted
Yes, miss.
and your actual units produced is less than budgeted.
Budgeted.
Yes?
Yeah, miss.
So it is option A.
A.
We already did this one. Which statement about absorption costing is correct?
We did this, I think.
It allocates fixed cost when it is sold.
No.
No.
See, costing helps us to find out the cost of the product irrespective whether the product is sold or not.
Yes, miss.
Okay. Absorption costing takes into consideration the total cost.
Yeah.
Marginal
Yeah, miss.
costing takes into consideration only the variable cost.
Variable cost.
So it allocates the fixed cost to the product, whether sold or not. This is correct.
Yes, miss.
Absorption costing will never increase your costs,
Yeah.
or it has no relevance with the level of inventory.
Yes,
So
miss.
this option is correct. Okay. Can you explain me this one?
Yeah, miss. A
Which
cost
row
account.
will give correct total production overheads?
Yes, miss.
Come on, which row will give you?
Miss, it's D. Because when taking account of total of production overheads, you don't take in account of wages of production workers and wages of assembly workers.
Why?
Um,
Production overheads are the fixed costs.
yes, miss.
Fixed cost means the indirect cost.
Yes, miss.
Fixed cost means which cost?
Indirect cost.
Indirect cost. So these are direct costs.
Yes, miss.
So it will be row D. Go to the next one. Why is service department cost transferred to the production department?
It's 8. So that both direct and indirect costs can be covered by revenue.
And
So that overhead absorption rates can be calculated by 5.
so service department transferring to production department has nothing to do with the break-even point.
Yeah.
Yes, miss.
Okay. Go ahead. You all wanted help in this?
Yes, miss.
What is the company's profit using which costing?
Marginal costing.
Absorption costing.
What is the question? What
A
is the
company's
company's
profit was
profit using
100,000.
what? What is the question?
Oh, okay. Using absorption costing.
What is the company's profit using absorption costing? So sales minus variable cost is contribution. Company's profit using marginal costing is 100,000. Okay.
Yes, miss.
Opening inventory was 2,000 units. Closing inventory was 3,000 units.
3,000 units.
The profits because of marginal costing and absorption costing would change.
Yeah, miss.
The profit in absorption costing and marginal costing would change only because of fixed costs included in closing inventory.
Yes, miss.
Yes or no?
Yes.
Yes.
The profit in marginal costing and absorption costing would be different only because of the fixed cost that is included in the closing inventory. Yes?
Yeah.
Yes, miss.
My closing inventory is how much?
3,000.
3,000 units.
What is the fixed cost that is included in the closing inventory?
30 per unit.
30 per unit.
So 3,000 into 30 is how much?
It's 90,000.
90,000.
The fixed production
90,000.
overhead absorption rate is 30 per unit, 90,000. But you had
Yes,
opening
miss.
inventory and you have closing inventory. So what do you take? You take the difference in the inventory.
Okay, miss.
So the difference in the inventory is how much? 1,000. So you will
Yeah,
take
miss.
the difference in inventory 1,000 into 30. So the profits would be only because of this difference.
Okay, so
If you have no opening inventory, then it would be the change would be because of the fixed cost included in closing inventory. But if
Okay,
you
miss.
have opening inventory, you will take the difference. Difference in the inventory is 1,000.
Inventories.
So the
Yeah, miss.
profits would be different by 30,000.
30,000. Okay, miss.
Marginal costing uses only variable costs.
yeah.
Yeah, miss.
Absorption costing uses variable cost plus fixed costs.
Yeah.
Yes, miss.
So absorption costing profits will be higher by
30,000.
30,000.
will be higher by 30,000.
So 100,000 plus 30,000.
100,000 is
see.
profit as per marginal costing. So the profits will be higher by 130,000. Are you with me?
Yes, miss.
What is direct costs?
Direct cost is basically the cost which is directly traceable.
Direct
Yeah,
cost is that is directly traceable to the product.
Yeah.
product.
Which is the cost that is directly traceable to the product?
Direct.
Rent, no. Factory manager, no.
No.
Carriage inward.
Yes.
Yes.
Okay. Cleaning material also no. So the
Yes,
answer
miss.
is option A. Come on, proceed with your work now. What is the limitation of a budgetary control? First limitation of budgetary control is that it is based on budgets.
Yes.
It
Yes.
can lead to staff demotivation. It can
Yes.
lead to staff demotivation
Yes.
if you are unable to match your budgets.
Yes, miss.
Yes, and it may also prevent your managers from being creative. So this is your limitation. So all the three are the limitations of budgetary costing.
Yeah.
Are you with me?
Yes.
Yes.
Total supervisor salary. How is it classified? First thing you need to understand that supervisor's salary is mostly fixed.
Mostly fixed.
It is
Yes.
mostly fixed. When I am saying that it is mostly fixed, so I need to see the circumstances because sometimes we may also give them commission.
Yeah.
Yes.
Sometimes we may also give them commission.
Yeah.
So as a part of the expansion program to increase my production capacity, business wants to employ additional factory supervisor.
Yeah.
Yes, miss.
How are total supervisors salary classified? So first I had one supervisor.
Yes.
Because employing the expense will go up
Yeah.
and I will have another supervisor.
Yes.
If I employ one more, it will go up by a fixed amount and I'll employ another supervisor.
Yeah. Which means it's stepped.
That means it is a stepped up cost. What are fixed costs? How will you do it?
So first thing is you do is you minus the total
You
cost.
find the variable costs included in
Change in.
total cost. This line is important.
Yes.
You will find the variable cost included in the total cost.
So first thing you do change in
So you do change in costs
divided by
Yes.
change in
Or by changing quantity.
divided by change in quantity. What is the change in costs?
cost. 32326.
I thought you'll have the working with you.
No, we did it and we erased it.
No. How much? It's
Uh,
86,400.
Minus
Sorry?
86,400.
86,400. So what is the variable cost included in the total cost? It is 7.2.
Yeah.
Yes.
So I have 20,000. I have variable cost. I will have fixed cost. 7.2 into 20,000. So this is 144,000. So the fixed cost, the total cost is 240,000.
Yes.
So fixed cost will be how much?
96.
96,000. Fixed cost will be 96,000, 32,000. 32,000 into 7.2. So this is 230,400. You will check. So this is coming up to 326,400.
Yeah.
Yes.
So
miss.
what is the fixed cost? It is 96,000. You need to check it, okay?
Okay.
Yes, miss.
This is the question.
Break-even sales volume. So your break-even sales is fixed cost divided by contribution per unit. If the break-even is in units.
Okay,
If
miss.
the break-even is in units. So the break-even is 15,000. I don't know what is my fixed cost and I have my contribution per unit as 6.
Yeah, 6.
Yes.
So my fixed cost will be 15,000 into 6.
Sure.
So it will be 90,000. Budgeted sales volume is 20,000. I have nothing to do with the budgeted
Miss, but
sales
wouldn't you
volume.
convert the 6 to units? Because look, it says here budgeted sales volume is 20,000.
What is your formula for break-even point?
Yeah, that's the formula. Yeah, yeah.
You have the break-even sales. This is just to confuse you. Are you with me?
Yeah.
What might a business use budget? Why might a business use budget? To determine the level of demand, do you use budget?
No.
No.
To have a benchmark against actual performance?
Yes.
Yes. To know how much raw material suppliers will be able to supply? No.
No.
So you might use a budget only for this.
Yes, miss.
When a company produces 5,000 units, it requires one supervisor.
Yeah.
If the production is increased beyond 5,000, then 2 supervisors.
Yeah. Yes.
Which type of cost this is an example of?
Stepped.
Stepped costs. Advantages of budgetary control system. It does not help to prepare year-end statements. Budgetary is just an estimate.
Yes.
It sets an easily achievable level. No. It gives you a target that you have to achieve. Managers become responsible for implementing the budgets.
Yeah.
And where budget targets are not met, action can be taken 3 and 4.
Yes.
Option D. What is it?
We were in the middle of the working year.
What would be the total telephone costs incurred for 305,000 inquiries?
So we did the same thing.
So change in cost is how much?
150,000.
So variable cost included in the total cost is 1.5.
Yeah.
Yes.
Huh?
Yes.
So for 250,000, the variable cost is how much? 250,000 into 1.5. It will become 375,000.
Okay.
So your fixed cost is how much if your total cost is 425,000?
Okay, so minus 4.
425,000 minus 375,000. So your total cost is 50,000. Fixed cost is 50,000.
Okay.
You will check again for 350,000 units, 350,000 phone inquiries. Fixed cost is 50,000. Variable cost 1.5 into 350,000. 1.5 into 350,000. So this is 525,000. So this is becoming 575,000.
Yeah.
Are you with me?
Yeah. And what's the option?
Are you with me?
Yes.
Yes.
Okay. So 575,000 is the
Fixed
total cost. Now
Total
I
cost.
want 305 inquiries and total cost.
Yeah.
So 305 inquiries, the variable cost would be 305 into 1.5.
Yeah.
305 into 1.5. So this will be 457,500.
Yeah.
And 50,000 is the fixed cost
So plus.
plus 50,000. So it will be 507,500.
B.
Yes.
Option B.
Okay.
Yeah?
Yes, miss.
Which statement are correct? If output increases, fixed cost per unit decreases. Correct.
Yes.
Output increases, variable cost per unit remains the same. Yes.
So it's per unit.
Output decreases, total fixed cost remains the same. Yes. Output decreases, total variable cost decreases. So all the options are correct.
Yeah.
Yeah,
1,
miss.
2, 3, so all is correct. What statements relating to marginal costing is correct?
C, 2 and 3.
Yeah, miss.
Marginal costing, fixed production cost. Does marginal costing
No, it's only variable cost.
only variable cost? So this is incorrect.
Yes, miss.
Fixed production cost are fully written off as an expense. Yes, because
Yeah.
I take it as other expenses.
Yes, miss.
Variable cost is included in inventory valuation. 2
Yes.
and 3 is correct, so it will be only option C.
Yes, miss.
Why might a business use budgets?
In the level of demand.
To have a benchmark.
No.
Why you use budget?
To determine the level of demand for its product.
Yeah.
To have a benchmark against what to assess. This
B.
answer is wrong. Only 2.
Oh.
They might have put it wrong. They will use budget.
Yeah.
Budget has nothing to do with the demand. Budget has nothing to do with the raw materials that is supplied.
No, but I really get the cost, would you, for the use of budgets?
The same question is there on top. The answer is D. You all will match your questions with the answers.
It's not the same question. You check